Well, Susie's going to talk to you tonight. She's Nancy's business partner, and she's going to talk to you about some functions that if you pass those things on to a professional to handle for you, you're going to get a ton of your time back. And it is a financially smart decision to do. So we'll let Susie do that. Thank you.
Yay. Well, hello, everyone. So glad to be here. When I do my presentation, I very much encourage questions. So, so please stop me if you have questions before I move on, and I'll also give you some opportunity to ask. Or I'll ask you at different times to make sure that what I'm saying is well understood and not just clear as mud. So, do I have permission to share my screen? I do. All right. Oh, wrong one. Never mind. Let's see. There it is. I got a new computer, so I never know what's going on. So today, what I'd like to do is talk to you about what I call the accounting superheroes. And what I mean by that is that these are great resources for you. And as Dawn said, this is maybe something that you can outsource or get help in the office with, and then that frees up a lot of time for you. And maybe accounting isn't your strong point, and so you can hire professionals to help you navigate the accounting side of the business. So what I want you to think about too is that the accounting assistants that you get, really, these are the people that help you with your abundance. They look at making sure that all your financial information is secure, and then it gives you peace of mind. So if you've got good financial records that you can trust, that are timely, then you can make a lot better business decisions. So there are certain resources within the accounting industry. There's different levels of assistance that you can have. And so what I've done is I'm presenting this information in a little bit different format that you might expect. And I'm hoping that by doing that helps you remember the information, because it's a little bit unexpected way to think about it. So I've created characters for you, the superheroes. And the first one is Kat, and I have modeled her after Katherine Johnson, who is one of if you saw the movie Hidden Figures. So she, what she did was help NASA with extraordinarily difficult mathematical equations, and she had to make sure that she's the one that got the astronauts to the moon and back, with figuring out the trajectories. So what I want you to think about, so what she represents for you is a CPA. And what we want in a CPA is someone who loves complicated regulations and mathematical equations. Maybe not what we want to do every day, but to navigate the tax side of your business. And for some of you, maybe that's super easy. You don't have a very complicated business, and so maybe you aren't going to engage a CPA. Maybe you're going to use just a tax service to help you prepare your taxes. But I would say that I caution people doing the taxes, preparing your tax returns yourself, because there's so many advantages out there that maybe you're not aware of. Maybe there's different tax credits that are available to you. So make sure that, and with every tax credit, there's certain reporting requirements, so they can make sure that you're also collecting the information so that you can get those tax credits. So I would strongly suggest that you use at least a tax service or a CPA to do that. So when you're thinking about what this person does for you, is that it's their main objective is that they're going to help you with your tax strategy and your tax filings and make sure that everything is on time. For some of you, you probably have to make estimated tax payments throughout the year. And if you're a sole proprietor, or maybe you're in pretty much any tax structure other than if you're paying yourself a paycheck, and that paycheck is also calculating enough to cover not only what your wage is from your business, but also the profit portion of it. But so they can also, these are the people that help you figure out what should my estimated tax payments be. And because it's not just estimated taxes, that's not just based on the profit of your business, but it's your entire tax situation. So if you are in a relationship where you are filing joint tax returns, you have to look at the earnings of both individuals, what kind of deductions you have available to you on the personal side, and then include the business income. So it's again, it's not terribly complicated for them, but it could be a little intimidating for us. So this will keep you on track with your estimated tax payments also. And if you don't make estimated tax payments, you get penalized. And so there's no sense in giving the IRS a penny more than they had that they're owed. And so the first person or the first resource for you is the CPA. And what I'm going to first do is introduce the different roles in the accounting industry, the people that can help you, sort of what their characteristics or what things you're looking for to see if to when you're trying to select someone to help you in that position. And then I'm also going to go into a little bit more to help you figure out, well, how do I manage that? I don't, if you don't know much about accounting and about taxes, it's really hard, I think, to then outsource that position and then try, or even bring it in-house, and then know what things to look for and how to help make sure that you're giving them all the information that they need to perform their job. So the next person, or the next position, this is Susie. And this is an accountant, or maybe sometimes the position is known as a controller. And a lot of what these professionals do is they make sure that all of your accounting systems are set up right, so that you are getting the information that you need, not only to file your taxes, but also to make business decisions every day. How many times do we file our taxes? Once a year. How often do we make a business financial decision? Could be daily, could be weekly, monthly. So you want someone that can help set up your accounting system so that it can help file a tax return at the end of the year, but more importantly, that it'll give you the kind of reporting that you need with accuracy, that helps you make business buying decisions or business growth decisions every day. So the reason I use the image of a yoga instructor is that you want to think of this as someone who should have leadership qualities, so that they can help make sure that whoever is doing the bookkeeping for you, that they have all the tools and training and information that they need to get that done properly. They also can make sure that they can be the go-between between you and the CPA, in the sense of just making sure that the CPA has all the documents that they need to do your taxes, or interim reporting to make sure that they can help make sure that your estimated tax payments are the correct amount. Think of them as like strengthening the core of your financial side of your business. The next resource that you need, this is Johnny, and Johnny is a bookkeeper. And I use the image of a race car driver because I want you to think about what a race car driver does. The race car driver does not build the car. The race car driver doesn't build the track. What the race car driver does is make sure that he knows how to drive the car, that he understands the track where he's going to be driving, and just loves going around and around and around the same track over and over again with accuracy and speed. So that's sort of what you're looking for with the bookkeeper. They're not the person generally who's going to help you set up your accounting system. And they, because they may not have enough accounting knowledge to do that, but once it's set up, they should be really good at data entry and really good at accuracy. So what you want to know too is that you're not alone, but this is a team. This is I want you to, a lot of times we have a CPA firm, maybe we have a part-time bookkeeper, or we have an outsourced bookkeeper that helps. And then maybe you have someone that comes in and does sort of that in-between level, that controller position where they're setting things up. And you want to make sure that they, even though they may be from different, they don't all work for the same company, or they're not employees of yours. You want to make sure that they are all functioning and communicating and working as a team for you. And I see sometimes where business owners, they don't necessarily encourage the bookkeeper to speak to the CPA, and they do that because a CPA is a lot more expensive than a bookkeeper, and they don't want to pay, maybe they're a little worried about paying that CPA rate for that consultation. But that you should set up a situation where the bookkeeper has a really good relationship with the CPA, feels like they can call him, because there's going to be things they just don't know how to do because they don't have the accounting knowledge. And so if they can feel comfortable or confident that if you have an accountant or a CPA that has more knowledge, that they can feel comfortable and confident calling them and just saying, gosh, I don't know, can you help me? And they can be a mentor for them, and they can help them get the work done. And then you're getting the work done right the first time, rather than them guessing and putting things maybe in the wrong category, and then the CPA or the controller having to come in and fix things. So just really think about these resources as being a team. And I don't know how many of you are in business or how long you've been in business, but I would say that if you think about the cost for each of these positions, that a CPA is generally somewhere between maybe $200 and $300 an hour is what they charge. A controller or an accountant might be anywhere from maybe $125 to $200 an hour. And then your bookkeeper, if they're an employee, that's a different wage. But if you're outsourcing, if you're working with an independent business owner that is a bookkeeper, then they're probably going to charge anywhere from maybe $40 to $65 an hour, somewhere in there. So you also want to think about who's the best person to do what needs to be done. You're not going to use CPA very much. So that just want to go to them when you need tax advice, or they might be the one that helps set up your accounting system for you. Then the bookkeeper is the one that's going to do the bulk of the work. So that's going to be the one that you're going to have more hours with. But you want to make sure, again, I see a lot of times where bookkeeping is done incorrectly because the bookkeeper just doesn't have the knowledge that they need in order, or the system wasn't set up properly for them. And then what happens is that then you have to pay someone to come in and do forensic accounting and try to clean it up and fix it. And we don't want that to happen. We want it right the first time. Any questions? I'm going to go in next into sort of how to manage that. But any questions on or what your experiences have been with accounting or with bookkeeping resources? No. So I would say, how do you find a good bookkeeper? Any ideas? No, okay. You can talk, it's okay. So a really great way to find a good bookkeeper is if you have a CPA or a tax person, ask them for a recommendation. That's a really good, because they're not, I can guarantee you that a CPA and a tax person is not going to recommend to you a bookkeeper that doesn't do a very good job, because that means their hard job is going to be harder, right? And they work with a lot of different clients that have used different resources. So that's a good way to get a recommendation. You can also ask other business owners that you know, and if they have a good bookkeeping resource. But just make sure that sometimes we'll ask other business owners if they know a good resource, and maybe they don't even know what the expectation of that position is. So if you do get a recommendation from someone who's not in the accounting industry, then I would just ask for references of other, maybe of other clients that they've worked with, other CPAs, if they're from the bookkeeping level, who they've worked with. I think too, Hannah, I bet that the SBDC has some resources, maybe that referrals that you can make for everybody.
Yeah, we can help you get connected for sure.
Yeah. Okay. So the main thing too is when you're hiring these people, the one thing that's very helpful is find out, do they have experience in the childcare industry? That's going to be real helpful if they have experience in your industry. The other is that you're going to want to understand exactly what their scope of work is. What do they usually do? What do they like to do? So that you're making sure, again, that you're hiring, you know the duties that you need done, and you don't want to force someone to do something that they don't normally do or that they don't like to do. Yeah. Oh, sorry. So you want to make the industry experience, and then you also want to understand really what do they normally do, what's in their wheelhouse or in their practice, and then work with someone that you get along with, someone that makes you feel comfortable and confident. I had a client that I was working with the other day whose CPA, and she was asking a lot of questions, and the CPA said, look, I charge $200 an hour for this, and you just need to hire a CFO. And so my clients, the reaction to that was, I don't need to hire a CFO. I just need to work with someone who enjoys consulting and can teach me and help me understand the financial side of my business. And so that's not a good fit for her. So now she's looking for another CPA that is more, that has, not only does great taxes, but she also needs someone who has consultation and training as part of their practice, their model. So just think about what it is that you need, find out what they do, make sure that the personality fits, and get references to make sure that they can do what they say. So one of the hardest things to do when we're outsourcing this bookkeeping and accounting is, how do we manage that? How do we even know what they should be doing for us and what we need from them? So there is ways that you can define the expectations. So if you think of it, here I have the image of a compass and a roadmap. So what the roadmap represents is that how are you going to make sure that they're going to be able to accomplish what you're asking them to do? And that's by asking, do they have a service agreement? So that you can understand, you have a clear understanding of what it is that they are going to do for you. So that's one thing. Ask them for timelines. Do they tell, if they're going to do your accounting for you, what's the expectation of when they have the accounting done? Or if they are doing tax work for you, what are their timelines? What time, when do you need to get them information? And then when can you expect them to have the results of that work done? And then there's also checklists that they can provide for you. And I'm going to give you a sample and kind of go over a bookkeeping checklist a little bit later in the presentation. But those are a great way too. You need to define the expectation of what they're going to do for you. Don't assume. Have them help explain what it is that they're going to do and what kind of tools do they have, like timelines and checklists, so that you can see what they are going to do and when they're going to do that. Then once you have that roadmap and once you understand what the relationship is going to be with them, then you have to have some way to check their work and to know that things are done right. And so the way that you do that is they're going to provide you reports out of your accounting system, or maybe they'll show you how to pull the reports yourself. And then you should sit down and discuss things with them and review it and have them explain to you what the financial information, what the reports should be telling you as the business owner. So these are all ways that you can that you can manage those expectations, which makes it easier for you to then, you don't want to micromanage, but you certainly do need to have some management of that. So let's talk about this from the CPA perspective. So a CPA almost always has a year-end checklist that they will give you. And they'll say, these are all the documents and all the information that I need from you in order to file your taxes for you. And this is the date that I need to have these by, so that I have enough time to get the work done. So you cannot expect a CPA to do any tax strategizing for you or do a very good job, honestly, if the tax deadline is April 15th and you hand them all the information they need on April 14th, and they probably just won't even be able to accomplish that for you. So know that they have to tell you what they need, and then you have to give it to them within a reasonable amount of time. So one of the things that I have, and this is in the presentation for you, so you don't have to write it down. You've got the slides, you've got this information, is that it's nice to know what the tax filing deadlines are for your business. And so what I've done is I've told you that, excuse me, I've listed here what kind of tax structure you are and what tax form is going to be prepared for you and what the filing deadlines are. So any companies, all companies with employees, W-2s to your employees, and the W-3 that goes to the Social Security Administration, which is what tells the IRS what all your employees earned for that year so that they can check records and make sure they match as people file their tax returns. These are all due always by the last day of January of every year. So this year they'll be due January 22nd. January 31 in 2022. I'm really hoping that if you all have payroll, that you're using a payroll service and not trying to do this yourself. So a payroll service, I would say, would be another accounting superhero for you, because they'll take care of all the filings for you. They make sure that you make your tax deposits on time. Your W-2s magically appear at the end of the year. They get sent out to your employees at the end of the year. So that I would highly suggest that you add that to your accounting superhero team if you have employees. But then if any of you use contract labor or contract services, then they have, or pay rent, then you have to file a 1099 NEC, which is non-employee compensation. That's for your services, or a 1099, 1096 is that's the report or the summary of all of the compilation of all the 1099s that you have to send to the IRS. So there's ones that go out to the people that work, the contractors that work for you. And then there's a summary that has to go to the IRS. And all of those are always due on the last day of January of the following year. So December 31 comes along in 2021. You only have 1 month to make sure that all your W-2s are out and all your 1099s are out, if you have that. So when do we use contract labor? It could be someone, it's not going to be people that are helping you take care of children, but it would be maybe you have someone, maybe if you do outsource a bookkeeper, that is someone who might need a 1099. If you have someone that comes in and does repairs and maintenance for you, or maybe you're doing some construction on the house for the daycare center or in this daycare center. So those are contracted services. Then a lot of companies don't know about this tax filing, and there is something called a business personal property tax declaration that you have to fill out. This depends on the county that you live in. Almost every county has this requirement. And what this is that, and it depends on the county what the threshold is, but if you have bought furniture or maybe like playground equipment, or you have computers that are used within the company, so any sort of tangible property or equipment that you're using within your company, you have to report to the county the value of that, and then they're going to tax you on it. And it's like double taxation, which is sad. But you pay sales tax when you buy something, and now you have to pay property tax on it to use it within that county. And so a lot of people aren't aware of this tax requirement. This is where you'd want to talk to a controller or a CPA. Sometimes bookkeepers can help you with this too, but make sure that you're compliant on this within the counties that you live in.
I have a quick question, sorry.
Yes.
So, like, for instance, with that, if I have a computer that we use at home for recreational stuff, but I also use it for my business, would that fall under this?
No, and the only good question, thank you. So when it falls under here is if the company buys it and the company is showing it as an asset of the company, then you have to report it. But if it's just you're using your own computer at home, and then no, you don't have to. But if the company purchases it for the business and you take a tax deduction for it because it's a business expense, then it will fall into this category. And these reports are always due by April 15th of every year. So they're going to ask you on April 15th of 2022, what assets did you purchase for your company in 2021? Now, a lot of the counties say until you have at least $5,000 worth of company assets, we don't care. It's too much trouble. A lot of times when you get business licensing within a city, like Denver is one, this is a part of that application process where you have to let them know if you have any assets, and then they'll start assessing that tax for you. So the way that tax works is that you purchase it in 2021, you report it to the county in 2022, and then you have to start paying the tax on it in 2023. Because they have to have time to assess what the tax would be. So just know that this can be a tax that you didn't realize even that you have to, that you're responsible for. Then if you're a sole proprietor or a single member LLC, then you're going to just file a Schedule C by default. That's going to be a part of, excuse me, down here, that's a part of your personal tax return. So that business tax return is part of your personal tax return, and so it's due April 15th, just like your personal taxes are. If you are a multi-member LLC or which is treated like by default from the IRS as a partnership, so if you have more than one owner in your business, then you're going to be considered a partnership, and that return is due by March 15th. If you are an S Corp, then your tax return is due by March 15th. The C Corp, it's March 15th. I don't know of any of you if you're in a nonprofit situation, but those are due by May. It would be May 15th, but that's on a Sunday, so it moves to May 16th, the first business day. So this would just give you an idea of for your year-end taxes, depending on your tax structure of your business. These are some important dates for you to know about and to be prepared for. So you don't want to wait to do all of the bookkeeping for your company until the very last minute or until after the year has ended. For one reason, you don't want to do that because then you're just running blind and you have no idea how well your business is running. But then also you don't want to have to rush this. It's hard to catch up a whole year worth of bookkeeping by these early deadlines. Don't do that to yourself. It's not worth it. So I just wanted to give you these business tax deadlines. Does anybody have questions on this?
I do.
Yes.
I just recently became LLC. I was a sole proprietor, so I still stay in that with just continuing doing the Schedule C. And it will, tax person, 'cause I do family childcare and I've been doing it for many years. So me just learning all this, the business sense of it and treating myself as a business owner is relatively new for me.
Okay. All right.
You're kind of like a one-woman show, you know,
Right.
all these things. But so it would just stay the same. Now that I'm LLC, I will still be part of our personal taxes.
Yeah, because when you become an LLC, a limited liability company, and if you're a single member, which just means it's just you're the owner, that's what you told this Colorado Secretary of State, it's just me, then by default, then you're still treated as a sole proprietor from a tax perspective. So yes, the Schedule C
So
is what you'll do.
and the thing about the business personal property tax,
That still applies to you.
that's just, so I've never heard of that, and so I mean, can you give some examples of what kind of assets that would be? I mean, I know you sort of did, but could you give me more specific? I'm just wondering if I was to get audited or something and they see something, what kind of penalties that I didn't even realize.
So do you have on your previous tax returns, did you buy like furniture or computer or tables? Trying to think of, yeah, okay.
Big things for my business. We've gotten furniture. I've gotten because the way my environment is set up, I have an area for adults to sit also.
Okay.
So yeah, but I mean, gosh, I've had that. It's more like a love seat sort of thing. I probably bought that 10 years ago though.
Right.
I mean,
Well, did you deduct it as a business expense or did you just buy it and you use it?
I deducted it as a business expense.
Yeah.
And
So you think you have to get up to $5,000 generally is kind of a threshold. So it depends on, and something that you bought 10 years ago, I don't know if they're, you know,
Mhm.
it would have been, you wouldn't know the tax on it. They're not gonna go back that far.
Okay, okay.
But just sort of kind of keep that in mind, that if you do start buying things for the business and you're deducting them, and then you want to kind of keep like a schedule. You would do it for insurance purposes anyway. You want to always have a list or a schedule of all of the things like that have a lot of value, or have enough value so that in case there's a loss, a fire, a flood, a theft, something like that, that you can easily come up with that list, so you could claim it on your insurance if you needed to for the loss. So you just kind of, if you start keeping that, even just say from this point forward or something, and
Start
it's
like an inventory, like in sense. I don't think I've ever done that, to be honest.
yeah, and it's not stuff, consumables that you use. It's just stuff that you buy and you keep them in the business and you use them over a long period of time. It's probably more relevant to people that have centers than
Susie,
home daycare. Yeah.
and Susie, that's exactly what I was going to tell Miss Cheryl there. I probably will have a better example because we have a large child care center. And
Mhm.
so it is literally the playground equipment. It is our, we have an indoor playground. It's like facades and things. It's that, of course, the furniture and all of our appliances, the refrigerator. So it is
Right.
truly, in that case, you know, it was a lot of dollars, and it was, of course, assets that are on our balance sheet. And so that was set up kind of in the beginning, and now we just need to keep track of like any additions every year.
Mhm.
So if you're a small business, you know, it's a good chance you could have been under that $5,000, especially if you spread it over several years.
Yeah,
Yeah.
and if it's that much, I don't buy it.
Right. Right. Yes.
Budget won't support that.
Yeah, a little hard to do that. So, right, thank you. I appreciate that, because it is more, this would be more for centers, or, you know, where you've got where bigger purchases and more of them is where it's going to be in there.
I'm curious, what if it was used, what if you're buying these bigger purchases, but it's with grant money? So we have providers that are getting 10,000, 25,000 plus for learning materials and capital improvement costs, but should that be taken into consideration?
Yes. It doesn't matter how you paid for it, it's say you have it.
It's an asset. If it's on your books, you gotta put it in that property tax statement
Yeah.
every year.
That's good. to
It's
know.
an easy miss, but when they come around and look, you know, we had a debate about our playground because there was like a change, but it was really like a warranty thing, and they were like looking at it like, well, that's different. So you do have to add all of those big purchases with the grant money that we got this year.
Yeah.
Because you can still write that stuff off, especially if you're getting a 1099, it's considered like income and stuff, right? Because you have to pay taxes on it.
It depends on the grant, I think. It
Yeah.
depends on how it's treated.
Yeah, so I guess maybe clarity.
It doesn't matter how you paid for it. I mean, well, in a sense, right, you still use business funds, even though it came from a grant, it can come from a loan, it can come, you know, from an owner investment. But if you have it on your balance sheet, if it was purchased for the business and you have it on your balance sheet, which is one of your financial reports saying, hey, we own this, right? Then it's going to be subject to this tax, and it will slowly depreciate off, and then you won't have to pay it anymore, but it's going to be, you have to pay, you still have to claim it.
Oh,
Thank you so much.
That's good to know.
and we have a quick question. What if it was gifted to you?
If it's on the balance sheet and you're using it in their city, yes, you have to claim it. You would have to claim it.
Thank you. Okay, cool.
Yeah. And so what you want to do, like, this is a lot to know, right? And to figure out, and there's regulation, there's all kinds of this, then, and buts, right? And so this is where you want to hire someone to help you navigate this and to figure it out. And someone who understands what needs to be reported, even stuff that you lease. Well, it has to be reported depending on the lease. So, or the type of lease. So just know that this is out there. It might be more than you know, and that's okay, but this is a great opportunity to talk to someone. A bookkeeper may or may not know this. So you have to try to find out. And a lot of CPAs, to be honest with you, a lot of CPAs don't do a lot of the personal property tax returns because they're more like federal and state tax. They're kind of that level income tax returns. And this is more of like an operational tax, like sales tax is an operational tax or payroll is part of your operations. And so they may not, a CPA may not have that information, but just keep going until you find out your resource that has that knows how to file those returns for you. And another thing that's important for that is that not only do you have to report when you buy something new, but what if you dispose of it? You let them know that you dispose of it, and now you don't have to pay that tax on it anymore. So you want to keep track of all of that. And again, you would want to do that for insurance purposes also, just in case there's a loss. Any other questions on this part of it?
Yes, I have.
Okay.
Okay, this all companies with contract labor and services. So if we hire a handyman,
Yes.
do we have to give 1099 in EC?
So if you pay them more than $600 in the year, yes. And you're supposed to get a W-9 from anybody that does work for you at the time they do the work, just in case, so that if it does reach that $600 limit, you're ready and you can file that return, because a lot of people don't want to report it. And so once it gets to that point where they do have to report it, they might not be very forthcoming with the information that you need. So you should get that W-9 from them before you pay them any money. Before you hand them a check, you need a W-9 from them.
W-9?
Yes, and you can go to irs.gov and you can just put in a search for W-9 and the form will be there for you.
Yeah, because like if we have someone fix something and I never thought of that.
Yeah. Because you can't, if you're deducting it as an expense on your tax return, you got to follow all those rules.
Sorry, I have another question. Does that include like if you have pest control or any of that stuff, if you claim it even for your house? Because I can't remember how much we pay for it, but does that all add up?
If your company is paying for it and deducting it as an expense, yes. So
Okay.
one of the things with the 1099s is if someone is a corporation, so not a limited liability company, but a corporation, if they file their taxes as an S Corp or a C Corp, then you don't have to send them a 1099 unless they're an attorney. For some reason, the attorneys made somebody a little frustrated and you have to send them one anyway, no matter what their tax structure. Or if you pay by credit card, you don't have to send a 1099. So there's lots of rules and things that go with that. So here's a great instance where you're going to want to have a bookkeeper or an accountant or a CPA that can help you navigate this and figure it out and help you get all the information that you need so that you are in compliance and so that you don't do something just out of just by not knowing that you were supposed to do it. Because they always, what do? They penalize and they charge interest. So every time you don't send a 1099, if you get audited and you haven't sent them, they're gonna fine you. I think it's up to $250 per 1099 that you didn't send. Because that's what the IRS, that's how the IRS catches a lot of small business, independent business owners. But that's how they have a way of knowing what did they earn, just like you get a W-2 when you're an employee. And then that goes to the tax authorities, it goes to the state and the feds, then they know you better have put that on your tax return, and they have a way of tracing that. So that's why they have 1099s. So that they can find the business owners that aren't playing the game right.
Susie, quick question. This is like going back to a tax form W-9 towards the end of the year that we send out to an employee. So generally what I do is I mail it to them, and there are several employees who have left and never shared their old or new address, and it comes back to us. How do we send those or find that employee, you know?
Do you mean a W-2 or?
Sorry, yeah.
Okay, so what you do, you're basing it on the information that they gave you,
Mhm.
and then you send it out and it comes back. So just keep a hold of that return mail that shows that it
Okay.
got returned to you. You can try to reach them, but if you can't, you can't. But the IRS knows, because when you send in that W-3 at the end of the year,
Okay.
it's reporting it to the IRS. And
Okay.
then the employee really should contact you and ask you for that W-2, but the IRS will catch it.
So will that put me in some kind of trouble?
No, that's why you keep the envelope that
Yes.
has this, that shows the date stamp on it from the
Right.
post office and shows that it was returned. Then you can prove that you did everything that you could to try to
Okay.
deliver that to the employee.
Okay, perfect. Thank you so much.
Yeah, yeah. Same with 1099s. You can't help it if somebody moves and they don't tell you. Right, but as long as you have proof that you did your best effort, that's why you have to have those W-9s too, and that's why you get a W-4 and all these different things from people that work for you, because that's you doing your due diligence to try to make sure that you can be compliant with what your responsibilities are. Okay, great questions, thank you. So then what I want to talk about is, how do you know that they're doing their job right? What do I even look at to see if someone is doing their job right? Because I don't know accounting. I mean, I do, but you don't, right? Or maybe you know some, but you don't know all of it. So how in the heck do you even manage that? How do you know if they're doing it right? So, and again, this is on your slides. So a good bookkeeper, as part of their process, they are going to reconcile different accounts, and reconciliations mean that I check to see what was recorded in the accounting, and I compare that to what went through the bank, and they should match. So, and that's their way of knowing that they got the dollar amounts right, okay, and that it's in the right date, right period. So they should reconcile your bank account. If any of you have like cash, you know, where you have every once in a while we got to pay the window washer and we just give them $10 or something to do that. Or there might be where you have a little bit of cash in case maybe one of the teachers has to go to the store and picks up a supply or something like that. And then you would always want a receipt, always a receipt to prove that how that money was spent. But if you have cash, you want to reconcile that. The credit card, if you have credit cards or any kind of loans. If you have any kind of inventory, you probably don't have a lot of inventory, I wouldn't think. But if you do have some of that, your accounts receivable. So that's if you are keeping track of billing the parents, and then keeping track and making sure that they're paying you, so they're you have an accounts receivable. Accounts payable means that if you have a vendor that will let you charge throughout the month and then you just pay their bill like at the end of the month, you want to reconcile that vendors, what they say your balance is to what your books say the balance is that's owed. And then if you have payroll, you want to make sure that the monthly payroll reports that are a part of the package that you get from your payroll service provider, those totals match what your accounting records say your payroll expenses were. So they should be reconciling all of these accounts as part of their bookkeeping process. So this is one way. Then what you need to do as the business owner is you want to look at those reconciliation reports. You want to look at the bank statement and compare it to the reconciliation report that the accounting software produces, and you want to make sure that they match. So that's a way for you to know that they did their job right. If there are things on the reconciliation report, there'll be a section that says this is all the stuff that didn't clear. If you have stuff that didn't clear and you know it did, then that just tells you that's your way of knowing as a business owner that there's been a data entry error and something needs to be cleaned up. Sometimes it doesn't clear because maybe you write a check to someone on the September 30th and they don't cash that check until sometime in October. That's a transaction that I would expect not to clear by the end of September. So it's not going to show up on the bank statement yet. It'll show up on the October bank statement as cleared because that's when they cashed it. So that would make sense to me that that one didn't clear. But I have seen accounting where they have deposits that somehow never made it to the bank, and it's 2 years later. That's probably not true. It's probably a data entry error. So if that's the case, then your accounting records are showing that you have more money in the bank than you really do have in the bank. So there's reasons why you want to make sure that all of that is done properly. This is how duplications are caught and mistakes are caught. That's why we all go through this reconciliation process. But you as the business owner then have a responsibility to just quickly look at the bank statement or the credit card statement and make sure that it matches. And any good bookkeeper, accountant, CPA will be able to show you, will help you understand the reconciliation report, or you can go through the SBDC and you can work with a consultant and they can help you understand those reports. And that way you can just feel confident that it's done right. So you don't have to do the bank reconciliation. You don't have to go through all that, but now you have a way as a business owner to know that it was done right. Just with one report, you can tell. So that's a big, that's a nice way for you to be able to manage what they're doing. So these are expectations of what a good bookkeeper does, what a full charge bookkeeper does. They not only put the information in, but then they have ways to check to make sure that what they've done is correct. Then if you think about another way to do this is you need to check the details. This is where an accountant, sometimes the bookkeeper can help you with this too, or a CPA, but what they're going to do is from a high level, they're going to help you look at the reports and understand what the reports are telling you. Because if you saw, I bet you have a pretty good idea of how much money you have in the bank every month, right? You know what your ending balance is. So if you look at a report on the balance sheet and then the asset section of that report is what the company owns and what its assets are, and one of those is cash in the bank. If you look at that report and that bank balance doesn't match what you know you had in the bank, you know there's a problem. Something isn't right. So now you can ask the person, you can ask someone to help you figure out why there's a difference. Maybe it's just that a check was recorded in your books, but it hasn't cleared the bank yet. So there might be reasons for that, but you need to look at the details of these reports, especially at the profit and loss level too. So when they record an expense for you, then you want to make sure that they put it in the right category. And so what you can do is you can not only say, just show me my profit and loss report, but show me the details of every account. And then you can make sure that they're consistently putting everything where you expect it to be on the account list, so that your reports are giving you the true story of your business, and they're consistently giving you the right story. So a way for you to manage the data entry and that the reports are right is to look at the details and make sure everything is in its proper place. So that's another way for you to manage this position without having to do all the work. Just look at the reports. I can guarantee you, if you look at the reports and you look at them every month, you're going to start to learn more and more what those reports are telling you and what the expectation is from that report, what they should be telling you. And you'll know right away if something is off. You'll be able to tell if something's in the wrong category.
And this is a way to protect your business. I know this is not the reason why you guys went into business, right? To deal with the numbers. But if you're not paying attention to the financials for your business, you are potentially putting your business at risk because someone can take advantage of you.
Yes. And I was working with another group last night, and they were telling me all these horror stories of embezzlement. And by employees and by the bookkeeper and by this person and that person. And you know how it happened? How it first of all, it gets caught because someone pays attention, but it can happen and it can grow by not paying attention. So that's one thing. But really the bigger part of this is that if you have someone, a trusted person, trusted in that you feel confident that they're good at their job, that they know what they're doing, and then you verify that they're doing their job properly, and then you look at those financial reports, think about how strategic you'll be. Such a strategic business owner. You'll have opportunities to make changes when you need to. You can do tax strategizing, so you're not just tax paying. There's a lot of opportunity for you, but you have to have good records, good accounting records, and you have to look at them often. And like Dawn said, accounting is probably not why you started your business, but I bet you money is, and all of the money is in the accounting. So you want to make sure that the accounting's right and that it's giving you the right information so that you can keep that money flowing and coming in.
And it's going to tell you when you can afford to buy something in bulk in order to save money, or, all of these different things. And so you need to know what those numbers are telling you.
So now what I want to do is I'm going to give you one more. So just think about, we talked about a lot of stuff that is probably not your specialty, not your area of expertise, right? So, and that's okay, because that's why you have these accounting resources that can help you. So I just wanted to give you, and I shared this with you all so that you have it as a resource. So in our firm, we have bookkeeping checklists that we have, and I'm giving you a couple different examples. So this is just think of this as like, this is all inclusive. So not everything on this checklist is going to be relevant to your company, but especially if you want to do the bookkeeping yourself and you have the time to do that, and someone has helped you set up your books, this will help you understand what you need to do as the bookkeeper for your company to make sure that everything is done properly. So this just tells you, and we have it, it's can everybody see that? I can make it a little bit bigger. But this is by the type of things that you do, like accounts receivable and sales. And these are all of the different things that need to be done in order to make sure that your sales and that are recorded correctly, and that if anybody owes you money, you have a good system of tracking who owes you money. Then if you have accounts payable, so that means that this helps keep track if you have bills that you need to pay, who do you owe? And these are all the processes that a bookkeeper would go through. So when you're trying to hire a bookkeeper too, here's a list for you. You can start thinking about what's relevant to your company, and this will help you figure out what things you were asking them to do. All right. And you can start to understand what that expectation is. So there's there's bookkeeping duties, there's bank activity and review and cleanup. So I'm not going to go through the whole list with you. I can certainly work with you through the SBDC, or I don't know who you use up there up north, Hannah, but there are consultants that can help you work with this too. And any good bookkeeper should also be able to prepare for you of what their bookkeeping checklist is, what it is that they do each month, or what. And then you can look here and you can see if there are holes that they're not taking care of. So this is a pretty inclusive list. Then sometimes you just want kind of a checklist. It doesn't have to be quite that detailed. So here's an idea of a monthly checklist that you might have. And then here's another example that you can use. If someone comes in and they come in weekly, and each week they might have different duties. So in this week you have payroll. So this would be the first week of the month, the second, the third, the fourth. And so when it's gray, it means there's no payroll, but that helps remind them that they have payroll to do this week, payroll to do that week. So there's ways for you there's different ways you can set up these checklists, but this is something that you would want to have for a bookkeeper, or have the bookkeeper provide to you, that this is the list of everything I do every month. And then you can make sure that everything that is done that's relevant to your company. Again, if you're an in-home daycare provider, you probably don't have as many things. If you are a center, your business model is more complicated, and you're going to have more tasks that need to be done. Everybody should always reconcile a bank account. You should always reconcile a credit card if it's a business card. There's things like that you should always review every month. You want to review your financial statements. I don't care how little or how big you are. That's just what you want to do as a business owner. And then you also want to have a way to save records. So one thing people don't understand is that when you have a bank account or a credit card and you have online access to that credit card, that's usually a lot of us, that's how we have that access to that information. So the banks and the credit cards will only store that information for so many months or so many years for you. For an IRS audit, they can go back as far as 7 years. If it's really expensive and it's hard to get historical information once the bank doesn't want to store it online for you anymore. If you close a credit card or a bank account, you instantly lose online access. You have just lost all of the online records of that account. So if before you close an account, you always want to make sure that all the bookkeeping is done so that your bookkeeper has access to all the information that they need. And then you want to have a way to keep electronic copies or paper copies if that's what you're comfortable with, but you need to have every bank statement, every credit card statement, and you have to have some way to have a copy of that saved. Because once you lose it, it's really hard and expensive to get it back. You also, whoever is doing the accounting for you, if it's an online program like QuickBooks Online, then basically you're not going to lose that data unless you you quit using that software. Then you need to make sure that you pull down all the online records that you need. But if someone is using an accounting program that is on a desktop, so it's not in the cloud, then you want to make sure they back up every month. You want a backup of your financial file, your accounting file, so that you never lose that. Because what happens if there's some kind of malware and they come in and they deny you access to your software? How are you going to get your information back? If you have a backup, it's easy. You just say, you can't have my $10,000 and I'm just going to restore it, right? Or what more often what I see is that someone is relying on a computer or a laptop and it dies and they can't get to the hard drive anymore. And they just lost all their financial data. And now someone, at least for that year, let's say that happens in November, you can't get to your financial data file. Someone is going to have to redo all of the accounting from January 1 for that whole year. That's the only way you're going to get your financial data back. So backup, backup, backup. So all these suggestions are here. Another thing that a bookkeeper will do for you is they can set a closing date in the accounting software. So that means that once they've done all their work, you've reviewed the reports, you agree that they look good, everything makes sense to you, they can put a closing date on that. And that means they can't go back and change something that they've already done. And that usually just happens by a mistake, an error. They go back and change a previous month after it's been reconciled. But there is a way to protect the data once you're sure, once you feel confident that it's correct. So these are all things that are very common in the bookkeeping process, but I just wanted to give you kind of a resource that would help you understand sort of all the steps that would be normal, and the expectation that you would have, and that the CPA is going to give you their checklist for the end of the tax year, and that's going to help you manage that process, and having bookkeeping checklists helps you manage the bookkeeping process as the business owner. So that was all I had. It's kind of a lot, but just the thing is if it feels a little overwhelming, that's okay, because you got help. You don't have to do it all your own. You don't have to learn it all by yourself. There's people that will help you, and mostly good. You know, I think the position that's kind of the hardest to fill and to know that you've got a good resources at the bookkeeping level, because anybody can be a bookkeeper. It doesn't mean they're good at it. It doesn't mean they know accounting, but there's no degree, there's nothing. They just have to say they're a bookkeeper. So that's why you want to get those people, you want to have recommendations for those resources to make sure that someone else has seen their work and agrees that they know what they're doing. And then remember, make sure they're not going to know everything about accounting. I can guarantee it. I don't know everything. I've been doing it for a long time. I don't know everything about what's going on with the tax regulations and changes. I don't know everything about every industry, but I know how to ask for help. Mm-hmm. And so as long as I have as long as the agreement with the business owner is, you have my permission to ask for help, and don't feel bad because you don't know everything. Be happy that you're not just guessing. Then that helps everybody do a better job.
Okay, guys. So Susie, thank you so much for all of this. You guys, if you have any burning questions, we can go into those now, but we have some more information we need to go over tonight. So you can also schedule consultations. Remember, our consultations right now are free, right? And guess what? In 6 weeks, they're free. And in 6 years, guess what? They're still free. Like, this is a tool for your toolkit to keep in mind that anytime you're stumped on something for business or just need to process something for business, go to the website, find a consultant, go, okay, marketing, that's the person I need, right? Whatever it is, it's free. Why wouldn't you do that? So thank you,
Yeah.
Susie.
All right. Have a good evening, everybody. Good luck with your businesses. Thank you for what you do. We need you. Thanks.
Yeah. Thanks.
Bye.
Bye.
I gotta
Thank
figure out
you.
how to get out of here. Whenever I share my screen on my new
That is, yeah,
computer.
there you go.
All
I like that
right.
page picture.
Thank you. Bye-bye.
All right. Okay, so now I'm gonna share screen. So if you need to stand up and move around, do that, whatever you gotta do, like you're in your place, so you do what you need to do to take care of you. But I'm gonna keep going because we're running out of time, okay? So I'm gonna do a screen share here. And I want to talk to you guys about nurturing your business and taking care of your business. So here's the deal, like your business isn't going to do anything unless you're pouring something into it, right? If you stop paying attention to it, you're going to see it really start to decline. And I know that times have been tough lately, right? Really, really difficult to navigate everything. And so we're going to talk about that in relation to some of these slides, because even just in the basic world of expenses and revenues and managing your company, you add this whole dynamic of what COVID has done to the workforce and everything else, and it just becomes much more complicated by tenfold, right? Just much more difficult. But traditionally, when you're looking at your expenses, and I'm going to tell you, there are some great resources in the classroom right now that are going to walk you through, like, really think about all of the expenses that you have. Those documents, there's a document in there that's going to talk to you about every facet of like establishing your costs per classroom, right? Because you have different costs based off the age of children that are in care there. So it walks you through what quality may look like at two different programs, right? If you have lower ratios, then what is the increase in the cost for that business? So there's all kinds of great resources in there because you're going to want to look at and really read and consider for yourself and for your business. And then if you want to dig into those further, let me know because we can definitely do that one-on-one. So nurturing your business. So when you are talking about expenses, you're thinking about everything. You're thinking about your mortgage, you're thinking about your payroll costs, the insurance, all those very hard expenses, the hard costs that don't vary by a lot, right? Whatever it takes to meet licensing requirements. How much are you having to pay each month for food? Whoa, have you noticed how much food prices are going up right now, right? Crazy if you can get all of your ingredients at this point. Supplies, quality. So if you're doing any kind of quality improvement activities or trying to increase your rating, there are costs associated with that. And hopefully your grant funding for getting your rating is actually meeting that need, right? And paying for those expenses for you. But still, you need to be managing all of that. And then on the revenue side, you've got your standard direct pay tuition, you've got subsidies, you've got grant funding that's coming in now. You got to be thinking about professional development, which is an expense for you, but it's also, in a way, a revenue, right? It may not be that financial revenue, but I will tell you that the professional environment that you set up and the professional development that you offer for your staff and the kind of quality that you decide to offer, and the time that you invest, all of those things, right? What kind of culture are you creating in your program for your staff? Because I will tell you that running a sub agency, I have subs that call me and go, yeah, no, I don't want to go back there. They're not really feeding the kids the right way, and I just don't want to be in the middle of that, right? Or they're not following this rule and that makes me very uncomfortable. And, I've tried to address it and they keep just kind of brushing it off. And so I don't want to do that. Or, I don't like how I feel there because it's all chaos and I don't feel very appreciated there, right? If that's what subs are saying, what do you think your own staff is thinking? So you owe it to You owe it to them, you owe it to your families, you owe it to yourself to create the best business possible so that it functions in a way that meets all of the requirements that you have, but it meets that promise that you've provided for families as well. And the promise that you've made to staff too. Because do you think, what are they calling it these days? The Great Resignation, right? That's what you hear on the news all the time, because people are leaving their jobs in any and every industry right now because they're like, I don't have to put up with it. I can go do something else, right? And other programs down the street may be paying a lead teacher $3 more an hour than what you are. And if they are, and someone feels frustrated, it's an easy path out the front door. So you have to be very, very, very intentional about that. And I want you guys to think about that because I want to put us into small groups at the end of the evening so you can have some conversations, okay? Here's the thing. It's very easy to be pouring money into everything, right? Taking all your revenue, putting it there, but then you're springing leaks. And so if you're not paying attention to budget, if you're buying curriculum on a monthly basis instead of a yearly basis, you are losing out on savings, which is a little hole there where some of your money is flowing away from you. You're losing out on it, right? So you want to manage your cash flow in such a way that you can predict that cost and know that annually you're going to pay for curriculum instead of doing the monthly thing so that you can plug a hole and keep a little more money. And so all of the things that we talk about tonight can really impact how many holes are in your bucket. When I first saw the list of your guys' programs, when you first signed up, I was actually very impressed with the number of programs that have high quality ratings, that have CCAP contracts, because we didn't ask you a lot of those questions, but I looked each and every one of you up on Colorado Shines to answer that myself, right? And so I just want you to know, like, all of those things are helping you financially for sure. So we basically said all of this before, right? All of these things impact your revenue. If your quality decreases, and I know large programs that have been steeped in quality for years and years and years, and they're horrified at what they're putting out there right now for families, right? And they're calling and going, how do we fix this? Because we can't even keep the staff in the building at this point. So how do you ensure high quality, right? And so really, like, I gotta tell you, like, that's what I really respect about business owners in this industry. That pains your heart. And I know that makes it difficult for you as an individual, but I'm so grateful that those challenges weigh on you heavily, right? Because that means you're going to do whatever you need to do to move past this point and to recover. And you can recover. We learned last week the sustainability funds that are going to be coming, the resources that are going to be coming starting mid-November. So just hang in there and get through this rough patch, and you're going to get some help for the next 9 months, right? Do think about very intentionally and very carefully how you spend those funds. And I'm sure a lot of guidance will come out. It's going to be a good opportunity to help your staff out by maybe offsetting the cost of care for their own children is a good way to give them a benefit for that 9-month period. The one thing I want to caution you on is if you use the money to increase their regular check for that 9-month period, what happens when the 9 months are up and you have to go back to your previous rate of pay? You're back in the same situation or worse, right? So really think about that when you get access to those funds. Okay, sources of revenue, we talked about it. The enrollment that you have, the rates that you set, you need to be thinking about your rates. Like homes, it's pretty common for someone to say, oh, I just charge a monthly rate. Well, that's fine as long as you did the math based off of what you would charge weekly, right? And averaged that out over a 12-month period. But if you just set your rate as like, I'm going to charge whatever a month and didn't really do that math, you are losing. You've got a hole in your bucket. You're losing revenue. So you need to do the math. And if you need help with that, schedule it with me and I'll help you do that. Grants and loans, we're seeing a lot of that stuff. Guys, there are going to be tax implications from these things that we're really going to have to pay attention to, right? And this time around, they know, like they have to give us those details right at the offset. So when they put the application out, they're going to tell you what you have to do for the tax side of things so that you know what you're dealing with at that point. I will also tell you that you need to follow through with what you are committing to use those funds for, because the last thing you want is to take out, to accept a grant and do a project that costs you $50,000 and then you don't follow through on your side of the requirement or the expectation of that. And then they say, oh, you closed your business. That's fine. Give us $50,000, right? If they give you funding, they can come back and ask for documentation and accountability. And if you can't show it, then you've got a problem. Federal and state funding streams, so CCAP, right? If this federal thing, the child care entitlement, if that goes through, or if the universal preschool, we know universal preschool will be in place in Colorado starting June of 2023. If you're a part of that funding stream because you're offering 10 hours of care of preschool education for children that are 4 years old. If you're doing that, you're going to have some of those funding streams coming in. And then your quality rating definitely impacts that as well. And we'll look at those here in just a minute. You always want to make sure, and this is the stuff, right? Like with COVID, it's so hard to even have these conversations because I sit here and say, look at the difference in your enrollment capacity between 80 and 85%. And I know that there are a ton of programs in the state right now that are functioning at less than half their capacity, right? And so I know that that's a challenge. I know that you understand that if you can maximize your capacity, that usually at about 85% is where you're going to start seeing some degree of profit. And so I know that businesses are struggling, trying to make ends meet. I've got large systems that are calling me saying my back is up against a wall. I can't even, like, I have to go do a signature line of credit, right? Because I can't stay afloat. And they have like 20, 25 programs under their umbrella. And those are the companies that used to be very resilient, right? Because they had those resources, the staff and everything else that they could share and move from one program to another. Okay, we talked about weekly billing versus monthly. Just really pay attention to those numbers. And then making use of that space. Like if you're really trying to figure out how to add some revenue, maybe there's someone out there that really doesn't want to pay to have a gym set up all the time for a little kid's exercise place or something, right? And maybe they want to use your large space that you have available, like your rec room or whatever, if you have one of those available. Maybe there's a partnership there that you can establish with them so that you can make a little more revenue. Just really think creatively. There are some places that will lease out their kitchen space in the evenings so that they can actually have like a food truck, use it as a commissary, right? If you have the kind of space to be able to do that, that's not a bad idea. So keep your ear to the ground and listen for those opportunities. We know this, so this iron triangle, the document that I showed you before goes into great detail about this. Really making sure that you're maximizing your enrollment, you're maximizing your full fee collection, and you're charging the right price, right? That you're making sure that in each individual classroom, so we said the different prices that you make, the different revenue that you get from the different ages of classrooms, you're making sure that the numbers for that classroom are covering the cost per child that you're experiencing there, right? So really watch that. And if your rates are off, you're burning money. And if you're charging less than your competition, you're probably burning money, right? These days, it's a pretty competitive thing to find childcare. People are begging for childcare in a huge part of this state. And so here's the thing with CCAP rates. It's not one and done. It varies per county. And so I put this chart together based off of this past year's rates, right? So that you could see the difference based off of rating levels and 5 different counties here. So this shows that level 1 for 0 to 18 months goes anywhere from $45 all the way up to $60.50 per day. So if you're in Weld County, you're in very southern Weld County, are you really stuck with just getting that $45 reimbursement? No, because you can also do contracts with Boulder County, with Broomfield County, with Adams County. You can have multiple CCAP contracts. And especially if you're right off the highway or easily accessible from there and parents are passing by from one jurisdiction to the other, you can maximize your revenue by being very intentional about where you contract with for CCAP, right? And we all have to advocate with that system to make sure that they do a better job of providing these services and providing fair and equal rates for you guys as much as possible, right? Because these are all very individualized county decisions. And if they start feeling the pinch and they don't have enough providers that are taking their CCAP kids because they're paying a really low rate on something versus what another county is, they'll adjust their rates. They'll change it. So you guys have the ability to affect that. The other thing I want you to think about, because for the longest time, people were taking out 2 licenses, right? They had their center license and then they were doing a before and after school license, a SAC license, because it was easier. You had better ratios, you had fewer qualifications for staff, right? Here's the difference though. With that before and after school program, those are the rates that you're looking at receiving. If you instead expand your childcare license to incorporate your school age program and you deal with the higher ratios and all of those things that you're used to doing anyway, the reimbursement rates are significantly better. That's a per day rate. And so you need to think about that when you're costing out what's personnel cost and which license can I afford, which license is going to profit me the most, right? What's going to benefit my program the most? Think about these things rather than just the easy, just the easy thing of like the rule requirements for qualifications. Because keep in mind, the qualifications with the next rule set are going to be decreasing for centers, and it's going to be a lot easier. So you really can impact what's happening in CCAP offices, right? With enough noise, with us all working together, all of that. If they pass the Child Care Entitlement Act, a lot of CCAP stuff is going to go away because only 10% of that budget is actually going to remain, because most of the costs would come through this other federal program down to programs anyway. And they promise that it's not going to be based off of a market survey like this was done, but instead be done through like a very complicated financial formula that they put out there, right? My concerns about that are that if they get to determine the financial formula, and yes, they'll talk to us about what do you think about this and the cost of this and the cost of that. But my one concern is that profit is something that a private market is driven by, right? You came into this because you love children but also because you wanted to make money for your family in order to, by providing this service. And so if the child care entitlement goes through, that means the federal government is going to determine what your profit is allowed to be as a business. So, and do you think they're going to let you be very different from the one down the street that has the same rating? And do you think that you're going to feel like very incentivized to go above and beyond when you've got the rating that you need to get the revenue that they're going to give you? So for me, that's what makes me sad about what they're working on right now. And we'll see if that actually goes through or not. But that's what we're trying to enter into the equation, into the conversation, is one of the unintended consequences could undermine ownership in childcare. And that would be a tragedy for our nation, truthfully. The system of CCAP is not equitable, right? It's not, because we saw those different rates that the different counties are going to pay. And so it's not equitable for providers. It's not equitable for families. And so pointing that out and pointing out the implicit bias that exists between those different systems is a good way to try and equalize what some of those benefits are from the different counties. So, and then we talked about the childcare license versus the SAC license, and then food programs. So if you're not in a food program, you're burning money, right? Because the revenue that you can make from that program. And so I want you to really consider that as well. Okay, I think that's the last of the slides. Yep. Okay. So talk to me. Your minds are probably swirling right now, right? Like tons of information tonight. What are you thinking? What are you wondering?
Donna, do you have a better or good resources that will help me to sign up for food program?
Yep. So here's what I'll do. I'm going to send you guys into your small groups, right? And I'm going to pull up those resource links. So I'll pull up the links for the homes, and I'll pull up the links for centers, and I'll put those into the chat for you so that you can access those there. Okay, perfect. What else? What else do you guys need? What would be helpful? Okay, guys, so Hannah is going to send you to your small groups. I really want you to, like, you've had a lot of information tonight to think about. Oh, there's so much more, like when it comes to the economics of all of this. Like if you're in a home, we need to talk about time space percentage. Like that's the formula that you need to use to determine how much you're deducting out of your expenses, right? And you need to be thinking about, in a home, you have to think very strategically, because you've got to have a separate bank account, right? Because you're running a business out of your home. And so just because you're buying paper towels and toilet paper doesn't mean that you pay for that 100% out of your family revenue, right? You've got to pay your percentage from your time space percentage out of your business for those paper towels and toilet paper and stuff. So truthfully, if you're a home and you want to make it easy for yourself come tax time at the end of the year, every time you go to Walmart or to King Soopers, you should have on the not treadmill, but on the conveyor belt, you should have two dividers, because you should have the items that are 100% for your family and not for childcare in one, and you pay for that out of your personal credit card or debit card, right? Then you have one divided area where it's time space percentage of business costs that you pay. So if you're at 30 or 35% for your time space formula, that's what you pay with your business card for those per time space percentage items, right? Like toilet paper, paper towels, cleaning supplies. And then the other third final area of that is 100% deductible for your business, right? And you use your business card for that. So Yeah, and on that middle one, when you do your time space percentage, so you do 30 or 35% of whatever the total is, then the rest of it you pay with your personal card, right? If you do that, you're going to save yourself about 2 weeks at the end of the year, every evening and every weekend day, sitting down, manually looking at all your receipts that you collected in that shoebox throughout the year, right? And dividing it out. Believe, like, the voice of experience right here, right? That blast shoebox. Like, don't go there. Don't do it. Be intentional. And if someone has to wait a little longer because you're being intentional with your business and processing this in a way that's going to save you 2 weeks at the end of the week, there's other lines. They can go elsewhere or they can just wait, right? You're going to get really good at this. And it's going to make a financial difference for you at the end of the year. Okay. So go to your small groups and talk about what was challenging for you tonight. What are what are you thinking about? What had you not thought about? Like, think about COVID with these conversations, and talk for 15 minutes because we didn't get to do that last time. And then we'll pull you back for a quick wrap up and be on our way. Okay. So in the chat, you've got some things. So you've got the website for centers to be able to sign up for CACFP, and there's a calculator there so that you can see the difference it'll make for your program, all of that, right? For homes, I sent the document to Hannah. She's going to send that out to you. Understand that when it comes to homes, you're just looking for the vendor that fits your personality well, that you're going to be able to work with well, because they're all going to have the same kinds of resources to give you, and they're all going to process things pretty much the same. So that's more of a personality thing. So if you don't like the one vendor, interview another until you find someone that really kind of fits your personality so that you can really comply with that. ELV, Brightwill, all of those, right? That's another way to save yourself time, because if you have a system that's notifying you when a document is going to expire, that's a heck of a lot easier than trying to build your own tracking system or checking through files all the time, right? For staff or for families. So really think about that. $25 a month is not bad. That's the home rate. Centers, anyone using it as centers? No one's using ELV right now? You can contact them and find out what they would charge centers. I know that they'll do an onboarding period where they'll even help you upload documents into their system. And the beautiful thing about it is, with those documents in the system, your licensing specialist can sit in their house and pull up all those documents and review them and tell you, they'll know exactly what's there, right? And they do not have to sit in your center for that entire time while they would normally be checking the paperwork. Yes, Laurie?
ELV also offers 6 months free. That's what we're doing with them right now before we start. So we're going through training with them. They have been just an amazing company and super helpful with a lot of amazing people working for them. So I really have enjoyed them.
So great that OEC is looking at some of their functions and going, oh, can we build that into PDIS eventually, right? Like, there's the downside of free market, right? So just saying. Okay, so I put 2 other things there. I just built a new website for the Early Childhood Education Association of Colorado. So I put that there so that you can see that. The one thing that's not functioning is actually purchasing the memberships, because this agency has been around since the 80s, and I cannot locate the original EIN letter to upload for Wix, right? So I've got to contact the IRS and do all of that. So anyone that goes there to do memberships, like I would see that if you apply for one, and I'll email you and I can send an invoice and do things that way. But I'm just saying that's the one function in there that doesn't work. I did get some functioning up on that website today for private forums. And so I'm very excited to offer our membership the opportunity to talk kind of like Facebook style, right? But without all of the eyes watching, right? So that you could, as a director, you can go into a private director forum and say, holy cow, what am I supposed to do in this situation, right? And have some private conversations with only members, which is pretty exciting. And if you have a payroll, if you don't have a payroll service, and want one, Journey Payroll, I cannot speak highly enough about. They are ex-Paychex employees, and they left that company and established their own here in Colorado. They save you 20 to 40% off of your current payroll costs if you're using a payroll company. And if you use that link right there to go and find out details and maybe shift over to them, they'll even pay for your membership with ECEA. Yep, so that link right there, that journeypayroll.com ECEA, that link will get you to them to be able to find out how much they can save you. Plus, they'll pay for your membership for a year. And then in future years, they'll pay up to $100 towards your membership fee with ECEA. And all the stuff that I've been talking to you guys about as far as advocacy work, that's what that membership pays for, right? Is for me to go and do this testimony and to push hard and make things, try and make things happen for you guys. And it pays for lobbyists too. So it's a pretty important thing for us to work together to transform this industry. Hannah, do you have things to wrap up for the week?
Nope. I mean, I'll send the wrap up email tomorrow with the links that you need, and everything is already up in the classroom. So hope to have an update on PDIS. I'll check in with them as far as everyone being able to register in the class next week or so. But again, we have plenty of time on that. So giving them a little bit of a time to work the kinks out. So that's
well,
all.
and keep in mind, they told us last night, how many help desk tickets do they have in right now? Do you know?
Can they even count? I think I've sent 1,000.
I will tell you, they have 4,000 help desk tickets that they have not responded to yet.
No one.
Right?
Don't worry, Dawn. They're going to be through the backlog in 2 weeks. That's what they said yesterday, right? 2 weeks.
Well, and then the person who's really responsible for it said 6 weeks, right? Because she knows what she's talking about. Jennifer O'Brien has the right number for that. So, and then the real challenge is, right, like not getting behind again. Because here's the reality with background checks, they got caught up a month ago, right? Now they're 2 weeks behind. So in another month, they'll be another 2 weeks behind, right? Yeah, and so really that's what we're going to be advocating for, our systems changes to where they have their own internal red flags and they start paying attention to this stuff and keeping it from ever becoming a fire for you guys, right? So if you want to hang on for a few minutes and talk to me if you have questions or anything, let's do that. Otherwise, go and have a great night. Read those documents that are in the classroom, please, because there's lots of really great, rich stuff there. And if you want to have conversations about all of that, let me know. Sign up for a consultation. We can talk it through with regards to your program. So, okay. All right.
Baby, Dawn.
This is Mama Mia. This is Mia. So, all right. Have a great week, you guys. If you have questions, hang on and let me know. Take care.